Good afternoon. This is Rich Nelson with Allendale covering the wrap-up commodity comments. Today is Wednesday, April 6th of 2011. For key interest here today, we can probably argue most of the action was all spread-based trades here today. In the past few days, traders had been buying corn or buying wheat and selling soybeans as a spread trade. Looks like that unwound here for the day. During most of the day, up until around noon or so, we saw significantly higher soybean prices while corn and wheat were down a good deal. Looks like most of that unwinding the spread business did get wrapped up here by the end of the trade, though. It closes on the corn down about 4 1/4, soybeans up 2.5 cents, and wheat down 5 1/4 on Chicago, and about 12 1/2 on the KC. In terms of news, generally still kind of positive here. About 9:30 this morning, we did learn from the EIA, the Energy Information Administration, the group out of the Department of Energy that releases stats. This group basically said ethanol production last week was 902,000 barrels per day. That's about the same pace as we've seen in the past few weeks. Last week it was 903. Past 4 weeks, it's kind of ranged from about 895 on up to 913. So today's number at 902 basically shows stable ethanol production. Nobody at this point is doing any major liquidation or concerning things like that here. So the bottom line is, so far, we are not seeing quote-unquote demand rationing. The trade took that as a positive note. For Friday morning, the trade is, in fact, we're expecting ending stocks to drop from 675 down to 602. The trade's got a 586 number for their average estimate. For soybeans, news today was actually a little bearish. Brazilian government raised their estimate here for soybean production from 70.3 up to 72.2. That 72, 73 range, that's actually the very high of all the estimates out there right now. So always a little bearish here for that one. Looks like Friday's report is not going to be a major thing here for soybeans. The trade is expecting a drop down from 140 million bushels down to 137. Shouldn't be a big mover for soybeans. Over on wheat this morning, we will note the models kind of changed. We did say that the models did show that the southern plains, including all the drought areas, will get significant rains here early next week. That's the primary reason why we did see the KC contract take a good dive here today. As far as cattle, we can argue the biggest, more exciting mover of today's markets, we did have a sharply lower close. This happened at the exact same time as cash cattle were moving at 123 and 124. Keep in mind, last week's average price for cash cattle was 121, but the ending trades were at 123. So bottom line is, today we saw steady to $1 higher cash cattle sales, and yet the market broke. Well, why is that? We got two things to point out here. Number one, wholesale beef broke. Down moderately 18 and 11 cents for wholesale beef. This is the first time that we've seen both choice and select drop in one day in 8 previous trading sessions. So certainly that's a little disappointing here. Also, secondary factor, the trade and the floor is actually talking more about this rising supply situation that we've mentioned in previous commentaries. So bottom line, the trade is saying this cash cattle market is done, and from here on out, we've got rising supplies and lower prices coming. Over in the hogs, we did have a sharply lower day as well here on the futures. Not much news out there, really kind of breaking hard. We can point out this simple fact: cash hogs were seen steady to $2 higher earlier on this morning, but the morning Iowa-Minnesota report actually showed them dropping $1.40. So while the trade was looking for a good deal higher cash hog trend to continue, we did see a USDA report kind of break a little bit here. At this point, we're not going to be too phased about the hogs. Most supply-based news we hear is still very, very good here for hogs. The simple fact is numbers aren't coming in as expected. So we're not going to view today's break as being the start of a major long-term trend. But certainly a lot of good things going on today as far as the overall trends in grains here. A lot of good things to talk about here, and a lot of good action plans to make up here for farm-based operations. Also, in case you didn't check it out yet, look at that basis chart we put on the very front page of our homepage yesterday. That chart shows corn basis actually tightening, even though we've had rising futures prices. So it is certainly something very exciting to take a look at here. If you have any questions about markets or marketing, feel free to give us a call, 1-800-262-7538. Thanks a lot.